So let's start from confidentiality and conflict of interest. So we have been looking at specific threats that an accountant or an auditor can face. We have been looking at different scenarios and relating it to the general category of threats. So let's now go to confidentiality. Now let's go to confidentiality. You know, confidentiality is one of the fundamental principles or one of the code of conduct for professional accountants. And what does confidentiality say? It says that an accountant should what? A professional accountant should respect the confidentiality of information, meaning that they should not disclose information. But however, they are giving some exemption where information can be disclosed. And we say there are three exemptions where a professional accountant can disclose what? Information. One, when it is what? Permitted by what? By law. And require the consent of the client. That means if it's permitted by law, you also need to seek the consent of the client before disclosing that information. Are we together? That's one. Two is when it's required by law. Are we together? Now we've talked about it. When it's required by law, because we talked about money laundering. When you discover that your client is into money laundering, it is required by law for you to disclose that activities to the appropriate authority. Or if he is into terrorism, financing terrorism, you discover that during the course of the audit. So you are meant to what? To disclose that information. It is required by law. And three is he has a professional what? Duty or right to disclose information when it is not prohibited by the law. Now let's now give instances where it is required by law. Are we together? Now the first one is clear. The first one is what? Permitted by law and require the approval of the client. That will be by consent of the client for him to disclose that information. Are we together? Required by law, there may be legal issues that the court may summon the auditor or the professional accountant to provide explanation to some scenarios or to some issues or circumstances that involve the client. So based on that, the guy say he will keep his mouth mute without talking. He has to say give out the information to the court. So during the course of legal proceedings or court case, it is required by law for professional accountant to disclose the information. And I told you that also he can disclose information to public authority. Example, EFCC, ICPC, when he discover that his client is into any activities like money laundering or terrorism. So it is required by law for the professional accountant to also disclose such an information. Or he is into drug trafficking. Someone that is claiming to have a clubhouse now. But what is the basis or the foundation of his income is from sales of cocaine. So and you discover that the sales they are making is not in accordance with the money that is coming into the account. And you discover that it is through cocaine now, sales of cocaine. You should report to the appropriate authority. Now let's now go to the last one, to the third one, which is what? When it has a professional duty or right to disclose, but not what? But not permitted by what? By the law. Now, if an ICANN should summon you, are we together? If an ICANN should summon you now, or there is a committee that is being set up, and that committee you are being summoned upon, it's not court case now to come and provide your own explanation of the issues or clarification of some issues. you are still going to provide an information. That information is because you are defending your professional profession, and you have a professional duty for you to disclose that information. So there is need for you to what? To disclose. Or disciplinary committee of ICANN now comes to your audit firm to come and see how you are carrying out maybe your work has a quality work. Maybe there is high quality of work that you are doing, that you perform during the course of an audit. You know, they require the audit working paper of the client. You require some information to look at. You can't say that I know because I want to know. You have a duty to work to release that information. So what's the exemption to it now? We have 3 when it is permitted by law, and what? And make consent of what? Of the client. 2 when it is required by law, and 3 when there is professional duty or right to disclose. So let's now move to improper use of information. Now we are still in confidentiality. We are still under confidentiality. Are we together? Now I say improper use of information. Improper use of information. That's what we are looking at. Now look at it. Let me give you an example. Now, 83, improper use of information. You know, we say you should respect what? Confidentiality of information. Do you know that some people take advantage? Okay. It is what? Yes. Now, confidentiality of audit working paper. Now, we are saying that the audit working paper belongs to you. It's not the document of the client. It's the property of the auditor. Yes, the audit working paper is the property of the auditor. Are we together? It's not the financial statement that the client provides. Is the property of the auditor. Now, because it's your property, that one does not mean that audit working paper should not be handled carelessly, that other parties can now have access to that audit working paper. Are we together? Because as an auditor, you should do everything possible to in the favor of your client, as far as the law as far as the law supports that act. Am I communicating? So you should always act in the best interest of your client, as far as the law permits. So don't provide the audit working paper because it is your property as an auditor to a third party, or make it accessible to third party. Now let's now move to conflict of interest. Conflict of interest. We have treated confidentiality. Let's now move to conflict of interest. Now, because the video was skipped during that time, the improper use of information, we say that auditors should not misuse what information at their disposal. Are we together? Maybe a professional accountant during the course of his professional exercise or dealing, he now come across some information that information that he has come across, he should not reveal it to third party, where the third party will take advantage of it, or whether he himself will also take advantage of that information. That is what we call improper dealing. And when a client is handling two clients and he knows that there is no how, there is a possibility that the information of one client can be linked to another client. What they are saying that if he can do everything possible to ensure that the confidentiality of each of the clients will be kept intact, he can still be providing services to both clients. But when he knows that there is no how, the information of client A will be reviewed in the course of audit or in the course of his professional dealings to client 2, he should what? He should resign from one of the clients so that there won't be threat to his objectivity or to his independence. Now let's now go to conflict of interest. Now conflict of interest can occur between the member of an audit and the client, and can occur between a competing client. So I will give an example and I will give a scenario on that. Between a member of an audit and what? A client. Now look at it. Conflict of interest can occur between member and what? Client. Now, what do you mean by member and client? Let's say the member of an audit, that means the member of an audit team. Are we together? The member of an audit team now has a business. Are we together? He has a business, and that business is a competitor to the client. Now, who can tell me the safeguard that should apply? The general safeguard that member should be what? Should be removed from the what? From the audit team. Are we together? Are we together? Now, if it is, look at it. If it is not an audit firm, if it is an individual, let's say an audit firm that is being owned by someone, and you have a business, maybe you may have more than 2 companies. Your company is beside that company, and you are doing the same activities. And the company now your company that you own is competing with the other company. They now invite you to be the external auditor. Are you going to accept the job? Because there is no how. There will always be what? Conflict of interest. Because of that conflict of interest, is advising that invitation should not be what? Accepted. Now look at it now. They say an ICA member or a firm should not accept or continue an engagement where there is conflict of interest between the members or the firm and its client. Because there is no how, there will be a bias. Are we together? So let's go to between competing clients. Between what? Between competing clients. This one is quite different. Are we together? It's quite different. Why is it different? Now let's now do, what do you mean by competing client? What do you mean by competing client? Let's now imagine you are the consultant, you are the auditor for Pepsi and Coca-Cola. Pepsi and Coca-Cola, or Adidas and Nike. That's competing what? Client. Now, that means they are not saying that you should not, how we together? They are not saying you should not accept the appointment. Now, if Pepsi is, you are the external auditor for Pepsi now, and Coca-Cola should now invite you to come and be the external auditor, they are not saying you should reject it. Now, if you know that there will be conflict of interest, you should not reject it. But if there won't be conflict of interest, there's a procedure you have to follow. What's the procedure? You should inform what Pepsi that you will be Coca-Cola has invited you, and you should also maintain that you train your staff that the audit team that will audit Pepsi should be different from that of Coca-Cola, because if you are using the same audit team, there will be threats to independence because of that conflict of interest. Yes, now. Okay, let's say the audit team, they were taking care of well than the other one. You will now be preferring one client to do the work of one client well than the other. Are we together? Are we together? Are we together? So what I'm saying is that if you know that you can maintain the confidentiality of the two clients, you can accept what? You can accept the engagement. But however, there are some issues that you need to what? Address. And I'll tell you the issues. One is that you have to look at will there be conflict of interest or issue if that engagement is to be had. You know, one, you are already carrying out an engagement for one of the clients. Are we together? Are we together? Now, look at this now. I've told you that you should use another way to manage this. You should use what? Different what? Auditing. And you should disclose to the existing client that you are what? That you want to take what? The job of Pepsi, but assuring them that there won't be any possible what? Conflict of interest when carrying out the activities for both clients. Are we together? Now look at it. There should be what we call Chinese wall. What do you mean by Chinese wall? That means you should prevent what? Access of information or linking the information or confidentiality of information between what? Between the two competing clients. Are we together? And all safeguard that is necessary should be what? Should be reviewed. Review the safeguard. Are we together? Now let's now go to corporate and financial advice. I think this is the end of that chapter now. Corporate financial advice. We've talked about something like this. God said that online classes, like they're asking you questions. Your eyes is heavy. Don't worry. Now let's continue. Corporate financial advice. Now, you should know there are some types of financial advice or corporate financial advice that will cause what? Conflict or threat to independence or to objectivity. Is either advocacy or self-review threat. Because that advice you have provided, if they acted on that advice, you will see that advice may have an impact on the financial statement. And when they have an impact on the financial statement, what will it cause? Self-review or threat. Sir, and if that advice that you have given does not go according to plan or according to how you have specified it, there is no how you will end up to be what? To this threat that is called what? Advocacy threat. Because you are the one that gives that advice, so you will be defending the position or the opinion of that client. Are we together? So there are some corporate financial advice that an auditor should not provide, and one of it is audit firm should not promote, deal in or underwrite client shares. You should not promote the shares of your client. You should not deal. Dealing means you should not buy. Are we together? The shares of your client, or try to underwrite. No, underwrite is like insurance. Companies want to issue out shares. They are not sure whether all the shares will be acquired. They will now find an underwriter to underwrite the shares. That any shares that remain unsold will be bought by the underwriter. So if you are doing that, what will you do? That means you will be advocating for the client. Come and buy the shares. This company is doing well. Are we together? Because corporate financial advice can cause threat to independence. Are we together? Are we together? Now look at this now. Advising clients involving in intake and overbid of or shares issue. Do you understand what we mean by that? Now, advising what? Clients. Advising what? Clients. Advising clients involved in intake. Are we together? Now let's look at it. Intake now or overtake. Now look at this now. Auditor often asks to give advice, and clients are involved in contested what? Bid over. Look at it. We want to sell a company. Let's say this is the company we want to sell. Now, I'm a client to company A. I'm an external auditor to company A, and I'm also a external auditor to company B. And both of them are bidding to buy this company. They are contesting. Will it not cause threat to independence? Yes. An auditor or consultant to want to vote. Consultant means they want to seek my advice on what? On overtaking of this company C. Now, it will cause an issue because I will not be giving professional what? Advice to both companies. I'll be acting in the best interest of the what? Of the both companies, and which cannot be what? Possible. Because they are competing to what? To bid. So this may raise a possible what? Lack of independence. I will say that. And during that course of advising or providing a professional advice to them, because I'm their consultant as an audit firm now, there may be information about A that I may mistakenly lead to B, because I'm in the possession of their confidential information. Are we together? So what is the guideline that you can provide, or the safeguard that you can apply when you find yourself in this scenario? There is no reasons in principle that companies should ask, that an audit firm should ask for both parties that is into what? Take over bid. That means you should not ask for both companies when the issue of what? Take over bid is what? Is in place. Are we together? Now, but if you ask, look at it now. If you are not acting as an advisor to both companies now, you should not be the sole advisor. Are we together? Or the main advisor. Do you get what I say now? That means there should be someone that will be the main or the sole, let's say the main advisor. So, but if there's no someone to act as the main advisor, you can support that person and still act as an advisor to the other party. But if you are the sole advisor to both companies, you should not act as an advisor to both companies. Are we together? Are we together? Now let's now go to chapter 3. Are we 4? Any question? Now let me pause the video. There's a question that we want to treat that I omitted. Now let's look at page example of page 8. Let me read it now. We want to look at the first situation first. They said a Nigeria audit firm, Tire and Sleep, is faced with the following situation. Situation 1. Mr. Tire is one of the audit firm partner. He and his wife have been invited by the managing director of company X. So company X is their client to a weekend celebration in Cape Town to mark the 20th anniversary of the incorporation of Entity X. Mr. Tire has been the engagement partner throughout this time. So what are the ethical issues and how to address the ethical issues in it? Now let's look at it. The first issue is that you should explain the issue. Are you getting it? Explaining the issue, the ethical issue. Are we together now? Now the ethical issue is there that Mr. Tire and his wife have been invited for a weekend free weekend in Cape Town. Am I communicating now? Yes. And you should address that this may actually be a threat to his benefit. And what threat can it cause? What threat can it cause? What threat can it cause? It will create a not familiarity threat. It will create a self-interest threat. What kind of self-interest threat is it? You know, self-interest threat is under general threat. It is under what? Gift and hospitality. You know, we talk about gift and hospitality. That gift and hospitality that is material should not be what? Will cause threat to independence. So, how do we know that this thing is material? It may not be material to entity X, but it's material to what? To Mr. Tire and his wife, because they are traveling to Cape Town. That means the company will be the one that will book their flight, pay for their flight, their accommodation fee and everything. So it's material to them. Are we together? Now, because it's material to them, it will cause threat to independence, and the threat is what? Self-interest threat. As a result of what? Gift. But if you should explain, if that gift or that hospitality is immaterial, Mr. Tyler and his wife can accept it, right? But we are saying that it's not material now. We are saying that it's not what? It's not material. Can you hear me, sirs? Now, you know we have addressed that. And what is the safeguard? The safeguard is that Mr. Tyler and his wife should not accept, because it will be material to them. Right? Now let's now go to the 2. Okay, hold on, sir. Now let's go to the second one.
Sorry, sir. Before that question,
I will shoot
you. Yeah.
Now let's look at it now. The second issue now is that they say the company is celebrating what? 20 years anniversary. And they say throughout these years that Mr. Tyler has been their engagement partner. He has been their engagement partner. So that one will create what? a limited liability company, that no partner should work more than what? 7 years. That during that 7 years, there should be a cooling off period. That the engagement partner should be what? Rotated. You remember? How many years is the cooling off period?
7.
Is it 7?
I think it should be 7 years.
I should try and know, sir.
Engagement is 7 years.
Engagement is how many years? That if an engagement partner should not work more than for 10 years, for individual companies, should not be more than 10 years. I would say for joint audit is 15 years. But after they should be rotated, right? For a cooling off period, that means another engagement partner should replace that person that has been doing the audit for 10 years now. Should for another further what? For a cooling off of 7 years. And I explained after I did that, I was even drawing a graph to show the cooling off period. So this man has worked how many years? 20 years as a engagement partner. So there will be issue of familiarity. That's the reason why he is even invited. Because he has become familiar with this company for 20 years. So this will cause ethical what? Issues. Because there will be over familiarity. There are some people in that company that would have been retired. Some people that was employed during his height. So he knows the history and the background of that company. So there will be issue of what? Familiarity. Are we together? So what's the ethical? How do we address that ethical issue? It should be what? Replaced. It should be replaced. So let's go to 2. Let's go to 2. Hold on, please. Now, look at the scenario, situation 2 now. Let me read the situation 2 again. It says a firm has been approached. The firm has been approached by the directors. Can you see? Has been approached by the directors of entity Y with a view of being appointed as the auditors. And one of the firm audit manager, Mr. Pai, is the company secretary of entity Y. Although he takes no part in the management, his parents are the sole director and shareholder of entity Y. Now, if it is part, look at it now. If Mr. Pai is part of the audit team, even though his objectivity is not influenced, but because his parents are the sole director, there will be what we call, we have independent in mind and what? And independent in appearance. We talked about it in appearance. That if someone outside now should say that the son of the auditor, of the directors or the shareholders of that company is part of the audit team, even though he has done the right thing, he will not be independent in appearance. Are we together? Secondly, even though he does not take part, are we together? Even though, let me explain that other part before I go into that one. Now, continue with the first part, that there will be influence. We talked about close family relationship. That close family relationship will cause threat. What kind of threat? It can cause familiarity threat. It can even cause self-interest threat. Because if Mr. Pai will be the one that will take over that company, or is receiving a benefit from his parents, are we direct or indirectly? It will cause threat. Are we together now? It will cause stress. Now, the now is a clause that he does not take part in no management responsibility, but he can still have influence over who? Over the audit team. Because they say he's the audit manager. And who is the audit manager? That means the engagement partner. So it can affect the audit team. So Mr. Pai should not be what? Should not be part of the audit team. That's the safeguard. He should not take part in the audit team. Are we together? Even though they are to accept that engagement, he should not take part. And if they know that he will be the one that will still oversee the audit, they should not accept that what engagement. The audit firm should not accept it. Do you get what I'm saying? Yes. You want to add something? So we are still looking at example in page 80. Now, situation 3. They said the finance director of entity Z, a private limited company, has requested that only certain staff are to be included on the audit team to prevent unnecessary interruption to the entity accounting department during the audit. In particular, he has requested that David, who has been the accountant in charge of the audit for the past 2 years, be assigned to the audit, and that audit team contain no new trainee. Who can tell me? Let me pause the video before. I know. Now the explanation to this is that the finance manager, insisting that David should be part of it, audit team. I will say that. And insisting that no new staff should be included is a sign of intimidation or threat. Because it's insisting. So it's intimidation that, okay, if you don't accept this condition, yeah, I will say. Okay. Now, if that condition is not being complied with by the client, by the audit firm, what they have simply said that they can reject or they can withdraw their engagement. So it's an intimidation. The finance director calling David that David should be included shows that there is over familiarity of David with the client. So after explaining all these things, I wish better. And please explain the reason why the finance director insists on that there should not be interruption to the accounting department, because when you're auditing and you'll be asking questions, asking documents, the time that they were supposed to be using to do their work, they will be using it to attend to the audit team. Now, what is the safeguard? The safeguard is that they should explain, not that they should just reject. They should explain to the finance director that it is improper for the client to prescribe or to request for the audit team that will audit them. Are we together? Once they do that and make them to understand, if they insist, they should do what? Withdraw. And also David should be what? Should be rotated, should be replaced by what? By a person, if that assignment is not rejected or withdrawn from them. Have I answered your question? So let's move to chapter 4.